Robots are going to take over the world, but until then, let's see if we can make a little money off them first. Investor Beat starts now. Thanks for watching. I'm Chris Hill. The market struggled to find its footing today as the Dow flirted with positive and negative territory. Boeing rose after earnings came in higher than expected, but AT&T dragged the Dow lower with quarterly revenue that was lower than expected. Joining me in studio today, Ron Gross and James Early. Investors spent part of the day trying to make sense of Apple's latest earnings. Bulls pointed to Apple's growing pile of cash and the fact that sales of iPads and iPhones came in at the high end of guidance. Skeptics, however, pointed to shrinking margins and the lack of guidance on when the next great device will be coming. What do you think? Does the good outweigh the bad here?
Well, the report had something for everyone, but I believe that the good firmly outweighs the bad. I think a year from now, we'll look back, we'll see that it was a no-brainer to pick up stock at this price, that the company will have released many great products between now and then, will have generated billions and billions of cash flow. Its balance sheet will be even stronger a year from now than it is today. Apple is a buy at these levels.
That's a lot of optimism.
It's a lot of optimism, absolutely. But I think it's warranted. I think people are treating Apple as it's the old Apple. It's not the old Apple. It's a large tech company right now, consumer products company, with an unbelievable balance sheet that has an innovative culture that will continue to produce new products.
A year ago, we were asking, when is this company going to pay a dividend? Now they're paying out more dividends than anybody.
It's great, Chris. You know, Apple is going through a metamorphosis. Instead of a caterpillar to a butterfly, it's more like a butterfly to a caterpillar, though. They're slowing down. They're a different company. They're going to have a new investor base. People are going to change out. So I sort of agree with Ron. I'm not sure in terms of good firmly outweighing the bad. How do you firmly outweigh something? A firm is a measure of force, and outweigh it is like a volume measure. It seems
don't get all sciencey.
Either way, I am bullish, and I think what we're seeing is positive.
And I think what they've announced that they're going to be doing with the cash, increase the dividend, increase the stock buyback, will introduce the stock to a brand new audience. Value investors will come in, income investors will come in, as James said. And I do think once the growth investors have kind of said, okay, I'm done, a new group of investors can come in and bring the stock to where it should be.
So you're a value guy. In your mind, this is a no-brainer.
Yeah, I think it's a no-brainer. There's always two sides to every trade, and I understand that there are risks involved, but sometimes you just have to look at the valuation and say, at the current valuation, we're being compensated very well for the risks associated with the investment.
All right, let's get to some of the day's movers and shakers. Procter Gamble's third quarter profits up 6% from a year ago, but the consumer products giant lowered guidance for the fourth quarter. Seemed like this company had been on a pretty good run for a while. This quarter seems like a stumble.
Yeah, I mean, the backstory, Chris, Procter Gamble had really wet the bed for so long. The market doesn't want to let it sit on the couch. I mean, it's a company that has had cost overruns. It messed up its foreign expansion. It just got bloated. So it disappointed the market. The last quarter it did very well. Investors were cautious, and now they're seeing this negative guidance, slightly negative guidance, slightly higher cost for marketing, and they're pulling back. They're pushing the stock down.
Well, hopefully they've got some products for that bedwetting problem. Lumber Liquidators hitting a new all-time high after strong first quarter results. Profits nearly doubled from a year ago, and same-store sales rose 15%. This is a stock you've recommended in the $1 million portfolio. Is there any downside to this quarter?
It was a stellar report. This is a four-bagger for us in $1 million portfolio. We've been really pleased with the execution, from the growing margins to the 15% same-store sales, as you mentioned. The company has a very wide growth runway ahead of it. They think they can get to 600 stores. They have less than 300 right now. So they're really doing a wonderful job.
First quarter profits for Yum Brands fell 26%, and overall revenue was down. Despite that, shares of Yum up. Why the pop? Is this one of those things where expectations were just absurdly low?
Chris, 26% is actually pretty good when you've spooked 1.3 billion people on your food. China is over half of Yum's business. Kentucky Fried Chicken is basically an institution there. I was there just a few months ago. I did not eat at a KFC. I would not do that on principle, but in general, it's hugely popular there. But over time, this is going to wash out. I think we're going to start to see that happen.
And finally, IRobot up big after strong first quarter profits. The company also raised guidance. I love the fact that the mission statement for this company, number one on their mission statement, is build cool stuff. From a stock standpoint, however, this is kind of a volatile stock.
It is a volatile stock. And I was just about to say they make really cool stuff, and you stole that thunder. But they do, whether it's vacuum cleaners or floor washers or home robots to very sophisticated military applications. They do really interesting things. Net income was up 12 times this quarter versus the same quarter last year. So while the stock is volatile, they're putting up really good numbers.
And that's great because one day they're going to rise up.
They'll take over the world, yes.
That's going to do it for Wednesday. Let's look ahead to the rest of the week. James Early, what's a stock you have on your radar?
Gentex, Chris. The ticker is GNTX. These guys make automatic dimming rear view mirrors, so you don't have to bother with the little flippy thing, which I don't mind, but I think a lot of other people apparently do mind. These are becoming the standard in cars. They have essentially the entire market. It's just going to grow from here.
All right, Ron, what about you?
Looking at Dynamic Materials, an industrial metalworking company, they report in the coming days. I really want to see what they have to say about capital spending because their business model is certainly dependent on some companies loosening the purse strings and building again. And so we have the stock on hold right now, but we'll revisit that when they report.
All right, for Ron Gross and James Early, I'm Chris Hill. Thanks for watching. We'll see you next time.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.